Hello, hello. It is good to see you. As an investor, if you double your money, is that a good investment? It may be, it may not be. I propose that there's some missing information. If you double your money over 72 years, that is a 1% return. If you double your money over 12 years, that is a 6% return. And if you double your money over 6 years, that is a 12% return. All right, and this is just an example that illustrates why you cannot just use one single number. My name is Tommy Brandt. I'm with TB Capital Group, where we invest in commercial real estate assets with a focus on apartments. And today, we're going to talk about 4 key metrics you need to know as an apartment investor. Let's get started. The first return metric to know as an apartment investor is annualized returns. And we'll typically take the average of this, so average annualized returns, or AAR for short. We take the average because it's typically over the hold of multiple years, and capital is typically distributed throughout the time of the hold. And the formula looks something like take your capital distributions divided by the capital invested, and then divide that by the number of years of the hold period. And so if you double your money in 5 years, that's 100% total return on investment divided by a 5-year holding period becomes 20% average annualized returns. Moving on to the second return metric to know in apartment investing is your cash on cash return. And so this is a very similar formula. So we are taking the total capital that's been distributed and dividing it by the total capital that has been invested. The total capital distributed is going to be your pre-tax annual cash flow. So some things to look out for here are, what is your year one cash flow going to be? And then what is your average cash flow going to be over the life of the hold? So a 20% cash on cash return would allow you to recoup your initial investment, assuming there was no sale or refinance. Moving on to the third return metric to know in apartment investing is internal rate of return. This is a little bit more complex. There's not just a simple formula I can give you for this one, but internal rate of return, or IRR for short, this represents how much your money is growing, and it factors in things like, what are your annual cash distributions? Are you selling the asset? Are you refinancing? Those things have an impact on the return. It's basically a formula that factors in the time value of money. It's built on the premise that a return today is better than a return tomorrow. And in terms of calculating this, I would just suggest using a spreadsheet tool like Excel or Google Sheets that have built-in formulas for this. Moving on to the fourth return metric to know, and that is an equity multiple. For the total hold period, this is your total distributions divided by your total equity invested. This does not factor in a hold period. And so if you double your money, that is a 2.0 equity multiple. And those are 4 return metrics to know for apartment investing. I hope there was something in there that was valuable. If there was, be sure to like and comment on the video. It helps out a lot. Be sure to subscribe to the channel if you haven't already. And if you have any people in your network that you think this is a valuable video for, you have my permission to share this video. And if you're like me and you enjoy videos on real estate investing, then check out the other videos on this channel. Thank you so much for stopping by. Have an amazing day, and we'll see you on the next one.